Today we're diving into Opendoor, and honestly, this stock is once again catching a lot of attention. The big question is simple. Are we looking at just another dip, or is this stock preparing for something much bigger? A lot has happened recently, and if you follow momentum stocks, you already know how quickly things can flip. So let's break it all down step by step and look at the real numbers, the short interest, the management changes, and of course, the levels that matter the most right now. Stick around because by the end of this video, you'll have a clear picture of where Opendoor stands and what might come next. Over the last few weeks, Opendoor has shown trading patterns that almost look like a coiled spring. The stock has been moving sideways with bursts of volume, and that usually means something is building under the surface. When you dig into the short interest, you start to notice how many traders are betting against it. But here's the thing. When short interest stacks up too high, it sets the stage for a potential squeeze. And that's when price action can get really interesting. Now, does that guarantee a breakout? No, but it does add fuel to the fire. Another thing worth mentioning is the housing market itself. Opendoor is directly tied to trends in real estate. If mortgage rates start easing, even slightly, it gives companies like Opendoor a window to push their business model more aggressively. The real estate market has been slow, yes, but there's always a turning point, and investors are watching closely to see if Opendoor can capitalize when that shift begins. Now let's talk numbers. When Opendoor trades in the range of $9 to $10, it creates a very psychological zone. If it holds above $10 for a consistent period, it signals strength. If it falls back under $9 with heavy selling, then we're back in danger territory. These levels matter because traders, algorithms, and even institutions keep an eye on them when making decisions. It's also worth pointing out that Opendoor's management team has been under pressure to deliver. Investors don't just want to hear about potential anymore, they want to see results. Revenue growth, cost-cutting, and market share expansion are the three big themes analysts keep circling back to. Until we see steady improvement in those areas, volatility is almost guaranteed. At the same time, you have retail investors who love this stock. The online buzz, the constant chatter on forums, and the retail buying pressure have all played a role in keeping Opendoor alive during tough stretches. It's almost like a tug of war between Wall Street shorts and retail traders who believe in the long-term story. And honestly, that dynamic is what makes this stock so fascinating. Another angle here is technology. Opendoor isn't just trying to flip homes, they're building a data-driven platform. If they can prove that their algorithms and pricing models give them an edge, then they're not just another housing company. They're a tech company with a scalable model. That's the story bulls want to believe in, and if that story gets stronger, the stock could reflect it. So what should you watch moving forward? First, the short interest updates. If it remains elevated while the stock builds momentum, watch out, because that combination can get explosive. Second, keep an eye on mortgage rates and overall housing demand, because that will affect transaction volume directly. And finally, track Opendoor's earnings reports, because numbers never lie. If revenue is growing, if losses are narrowing, then confidence builds. If the opposite happens, then you'll see confidence collapse just as quickly. At the end of the day, this stock is risky. No question about it. But risk is what creates opportunity. And if you understand the levels, the market dynamics, and the narrative, then you can decide for yourself if Opendoor deserves a place in your portfolio. So, let me throw it back to you. Are you buying the dip, holding your shares, or waiting on the sidelines for a clear breakout? Do you think we'll see new 52-week highs soon? Or is this just going to consolidate in the $9 to $10 range? Drop your thoughts in the comments. I'd love to hear your perspective. If you found this breakdown helpful, make sure to hit that like button and subscribe for more updates. Thanks for watching, have an amazing weekend, and I'll see you in the next one. Disclaimer: this video is for educational and entertainment purposes only. It is not financial advice. Always do your own research before making investment decisions.